Hey there, everyone. Welcome back to our channel, San Luis Obispo Real Estate. This is Jay Bond Real Estate Group, brokered by eXp Realty. If you're tuning in to a video on the 5 reasons to get a residential appraisal, you are tuning in to the right location. Now, as always, we appreciate you guys. We appreciate the support. We want to be your resource for real estate knowledge here on the Central Coast of California. Do me a favor, hey, hit that thumbs up button if you like what you're seeing. Hit that bell to receive notifications from us, as well as that subscribe button to stay tuned for new videos that we are dropping very regularly. We appreciate you. So going back to the 5 reasons you might get a residential appraisal. Let's start with the shortest and the simplest reason, right, or intention would be for personal knowledge, right? So that's reason number 1, personal knowledge. So gee, what does that mean exactly? Well, let's just say, hey, I'm a homeowner. Maybe I'm just curious to where the market is. Could I reach out to a real estate agent or broker and just say, hey, Jay Bond Real Estate Group, hey, what do you think my home's worth right now? Sure, absolutely. And in my opinion, I think that's probably the most valid opinion of value is from an active agent. For one reason, primarily, they are in the trenches every day, right? They know what consumers are biting on, what they're not. They're likely going to give you a very realistic opinion of value. However, you may want to go through the motion of hiring and paying an independent appraiser to come appraise for the value of your home. And they are going to be pulling data from multiple sources, right? And really looking at nearby sales between a specific timeline, usually about 6 to 12 months of historical sales, to try to establish an opinion of value, right, for your home. You could do that. Now, again, keep in mind that is not necessarily reflective of the market's opinion of value. And by market, I mean buyers, right? What buyers are willing to pay for your home. Reason 2. Right? Reason 2 could potentially be for, let's say, a probate, right? Now, a probate is involved, of course, with the passing of someone and, of course, their heir, right? Now, the court is typically going to appoint a probate referee, which is ultimately going to do an evaluation of value for said property for the probate process, right? And that pretty much caps off the reason you would do that during a probate. Now, reason number 3, you would want to get a residential appraisal. Now, this could be for a trust, right? A trust sale property. Now, typically, this is going to involve an appraisal on a purchase, right? When you're selling it, if there happens to be a buyer securing a home loan, very likely there'll be an appraisal. Now, that's not what I'm talking about. What I want to focus on with trusts more specifically, right, is a retroactive appraisal. Now, what is that, right? What does a retroactive appraisal mean? Well, ultimately, you are likely going to need to hire an appraiser that focuses specifically on retroactive appraisals to look back at historic sales, usually at the time of death, right? Let's say, for example, just for simple case study, the deceased passed March of 2023. You likely want to look at historical data up to that date to establish, hey, what was the likely market value of the home at time of death, usually for tax purposes and implications, right? So that's reason number 3. All right, gang. So reason number 4, you would secure a residential appraisal is for a home purchase, right? Now, there's quite a bit to unpack on the residential appraisal process for buying a home. Now, again, some folks might be buying cash, right? If that takes place, of course, hey, they likely don't need to pay for an appraisal, right? Now, most banks, however, if you are securing a home loan for a purchase, are likely going to want that buyer to order and pay for a residential appraisal. Now, this takes place for a few reasons, right? The bank, of course, wants to know, hey, is this property in sound condition, right? Especially based on whatever down payment that buyer has, right? They want to take that all into consideration. Is it habitable, right? Is there leaks in the roof? Are there any visible issues with the property, right? They want to make sure they have a sound investment that they're lending on. And then 2, hey, pull some sales nearby, right? Is the amount of the purchase price realistic based on what similar homes have been selling for, right? So you can almost think of the appraiser as still, right, an independent third-party, non-biased party, but they are also kind of being the eyes and the ears for the bank just to make sure, one, hey, is the bank lending on a product that if they ever had to foreclose, right, worst case scenario, they could likely do so with relative ease, and they're lending on something that's in good condition and a realistic dollar amount, right, to be parting ways with. Now, that's super important. Now, there are, of course, different types of residential appraisals, right? And what I want to do is talk about probably the weaker in scope in that pipeline up to, ones that are a little bit more lax. So what does that mean exactly, Jay? Well, let me unpack that. Now, VA, of course, is a Veterans Affairs loan, right? Awesome for veterans and active military, no money down type of loan. Now, with that type of loan program, the bank is looking at this scenario saying, hey, we're happy to finance this loan for you. We're happy to fund 100% of said loan. However, because of the no down payment, you really don't have much skin in the game. So, of course, the appraisal is going to be a little bit more scrutinizing with regard to condition of home. So a lot of deferred maintenance items might get called out when that residential appraisal is taking place for that VA appraisal specifically. So let's say, for example, a fence is leaning over or needs to be painted. Maybe a front door needs to be repainted. Maybe there's health and safety issue that the appraiser saw that they might call out in that appraisal report and want that deficiency remedied, right, before signing off on that appraisal report. Item one. Item two, with the VA loan, usually that appraisal is going to involve clearance of any termite work, right, for said property, which means that a termite report would need to be done. That work would need to be completed prior to close of escrow as a condition of loan, right? So the bank is ultimately saying, hey, we're going to make this appraisal really geared towards focusing on overall condition to make sure that we are lending on a very sound and safe property, especially since said buyer is putting zero money down, right? Now, let's look at FHA, right? Now, FHA appraisals typically run very parallel with VA appraisals. However, they are a little less scrutinizing with regard to deferred maintenance items, right? So, for example, a simple case, a big difference between VA and FHA is that you don't need to complete the termite repairs prior to close of escrow, right? So right out the gate, a little bit more lax on that criteria for that particular appraisal type. Now, thirdly, let's look at conventional, right? Now, this could be someone putting 5, 10, 20% or more money down on that purchase. Now, they actually are going to have the least scrutinizing appraisal process and might actually get away with some deferred maintenance things at said home or property that might get called out in an FHA or VA appraisal scenario. Well, why is that? Well, simply put, right, they're putting a lot more money down. They have more skin in the game. And that bank just says, hey, based on how much you're putting down, we're okay with being a little bit more lax on the condition of the home because, again, you're making a little bit more upfront investment. All right, so the fifth and final reason you would secure an appraisal on residential property is for a refinance situation, right? Now, let's unpack that a little bit. Why would you pursue a refinance on your house? Well, there could be a few financial reasons motivating the refinance, right? Let's say, for example, you don't have the cash or the capital and you'd really like to remodel your bathroom or your kitchen or your entire home. Hey, but you've got equity sitting there. Maybe I'll do a refinance, pull out some equity, remodel my house. Maybe I have some credit card debt piling up that I'd like to pay down, not be quite stuck with that direct monthly bill on those, right? There could be a lot of personal reasons behind that motivation for a refinance, right? So super important to analyze. Now, that aside, the process is very similar, right? You're going to be working with a bank that's likely going to order that appraisal for you. And that appraiser is coming out again just to look at relevant and most recent historic sales data to, again, establish an opinion of current market value for that bank, right? So that bank can say, hey, you know what? You've got enough equity. We feel confident pursuing this refinance for you and helping you free up that cash for whatever your reason was, right? So short and sweet on option 5. Now, gang, always, we really appreciate you tuning in. Do me a favor, if you like what you're seeing, make sure you hit that thumbs up, hit that bell for notifications, and make sure you're hitting that subscribe button to stay tuned for videos we are dropping regularly. Thanks so much for watching.